Good day, investors. On Wednesday, February 4th Eastern Time, U.S. stocks saw a divergent trend. The Dow Jones Industrial Average closed higher against the trend, while the Nasdaq Composite declined for the second consecutive day. A sharp drop in the chip sector was the core drag, coupled with divergent remarks from Federal Reserve officials, geopolitical disturbances, and the resolution of the U.S. government shutdown deadlock. Market sentiment turned cautious, with overall moderate trading. As of the close on February 4th Eastern Time, verified through cross-checking with Sina Finance and Jinchi Data, the Dow Jones Industrial Average rose 260.31 points, or 0.53%, to settle at 49,501.30. The Nasdaq Composite dropped 350.61 points, or 1.51%, to 22,904.58. The S&P 500 fell 35.09 points, or 0.51%, to 6,882.72. Capital flowed back to the energy and precious metals sectors on the day. The chip sector faced concentrated selling, and risk aversion and risk appetite showed structural divergence. Sector performance was significantly divergent. The chip sector weakened sharply, with AMD plummeting more than 17% and Nvidia falling more than 3%, becoming the main drag on the Nasdaq. Apple rose more than 2% against the trend, becoming the only bright spot among tech stocks. Energy stocks rose collectively, with ExxonMobil and Chevron both gaining more than 1%, supported by a rebound in international crude oil prices. Precious metal stocks continued to strengthen, moving in tandem with rising gold prices. Chinese concept stocks generally weakened, with the Nasdaq Golden Dragon China Index down 1.95%, and individual stocks showed mixed trends. On the macro and commodity market front, COMEX gold futures rose 0.98% as of the close on February 4th Eastern Time, closing at $4,984.20 per ounce, giving up some gains after hitting an intraday high. Supported by U.S.-Iran geopolitical disturbances and safe haven capital inflows, spot gold closed at $4,964.83 per ounce, an increase of 0.47%. WTI crude oil rose $1.26, closing at $64.47 per barrel, an increase of 1.99%, with rising global economic uncertainty and favorable inventory data driving oil prices up. On the macro front, the U.S. government shutdown deadlock was officially ended. Federal Reserve officials made divergent remarks, with doves signaling interest rate cuts and hawks emphasizing policy prudence. U.S. ADP employment increased by 22,000 in January, far below expectations, exacerbating market concerns about economic recovery. U.S.-Iran negotiations are scheduled to be held in Oman on February 6th, and geopolitical uncertainty will continue to disrupt the market. Looking ahead to Thursday, February 5th Eastern Time, markets will focus on U.S. non-farm payroll data, comments from Federal Reserve officials, and progress in U.S.-Iran negotiations, and are likely to continue the volatile and divergent pattern. Strategically, focus on structural opportunities in the energy and precious metals sectors. Cautiously deploy tech stocks, especially the chip sector. Avoid geopolitical volatility risks. Strictly control positions and dynamically adjust holdings in line with data and policy signals.